Dollar Tree stores, they've noticed a change in the customers coming through their doors. The chain says people with higher incomes, six figures or more, they're actually shopping there now. And that is the primary reason the Dollar Tree is now stocking higher price products up to $7 in price tags. In the financial world, some products come with fees and some do not. Nolan, how do you guys educate investors about what fees to look for when it comes to investing?
There definitely is a lot I think to look for when you're looking at what are the fees and comes to investing, and the reason being is a fee is a controllable item, meaning that by investment selection process you can pick investments that don't have fees, and some investments, on the other hand, do have fees. And the cheapest isn't always the best, but cost absolutely is one of the key characteristics to being successful in investing. There's different products that are out there. Traditionally, when you think about most like fixed annuities, a lot of index annuities, you could have bank CDs, you could have checking savings accounts. These are traditionally the type of products that you're thinking about on investments that have no fees. And all of those can be part of an overall plan. There's reasons to have those as part of your vehicles. In fact, we discuss a lot of where to utilize these tools in what is called the independent income system. So if you haven't learned about, our philosophy or methodology, and you want to learn more about not only fees and expenses, but how to put it all together, just go on the internet and Google independent income system, and then you'll learn about our methodology and philosophy of to put it together. On the flip end of the scale, when you go on the other side, there are different annuities that have fees and expenses. There's different private investments that are out there. Some of these commercials where you can purchase like precious metals, or when you invest money into the stock and bond market, variable annuities. These products have costs associated with them, and they're costs that you really want to be aware of. And it's an area that we can help go through an x-ray on the retirement team action plan. But when we go through and we take a look at it, and we're thinking about, let's call it the stock and bond market, the first thing that's pretty common these days is what's called management fees. And these are, typically the fees that are charged by the investment manager for managing the portfolio. They're typically expressed in a percentage of assets under management, and they can vary depending upon the different type of investment management that you have and the different firm or strategy that you have. It's common that these fees range in the 1% to 2% on an annual basis. Some fees, again, vary. Number two is you can have expense ratios. So expense ratios can be, commonly referred to as some of the operating expenses. Expense ratios are common in like mutual funds or exchange traded funds. It's a percentage of the net asset value. They cover those management fees, administrative costs, other operational expenses. Lower expense ratios indicate lower cost for investors. This is an area where you can again control that, and a lot of these areas the cost has come down in the industry. And when you look at expense ratios, to me, when you look at expense ratios, these are an area that for the average investor, it gets a little bit harder to notice. Like a management fee we were talking about earlier, you see the number, it's usually printed out on your custodial statement. You see what the dollar amount is. Expense ratios tend to be a little bit more challenging, especially when you deal with variable annuities. Variable annuities can have some good features and benefits for the right person, but they tend to be more expensive and having these expense ratios, because not only you get some of these operating expenses, you have to look at like the mortality and admin cost. You have to look at any rider cost that's associated with it, what's referred to as sub-account fees. And so some of those, that are kind of buried in that 700-page prospectus, they get difficult and can ultimately be kind of expensive. Number three is sales loads. Sales loads are typically a charge that's, when buying or selling an investment. So we can think about like mutual funds, certain what's called Class A, Class B, Class C mutual funds, have upfront sales loads, or they could have back-end sales loads that come off your investment based upon your time frame and how long you have them. Some of the annuities work like that too. So, some annuities have upfront charges, but most annuities have some type of time frame commitment that if you get out before that, you would pay a sales load or a sales charge called a surrender charge on an annuity if you didn't hold it for whatever the defined time frame was that you had set it up. And then there's also what's called no load investments that are out there. Those have also become very popular. No load investments, they don't charge sales load. So there's no upfront sales charge, there's no back end sales charge. And I would say, generally speaking, our firm, we tend to like things that are more no load investments, although, again, dependent upon everybody's situation. Sometimes some of these other products can add value depending upon what you're looking at. Transaction costs. So the transaction cost, you're thinking about what is the cost of buying and selling. It could be like the bid-ask spread difference on investments. So sometimes investments that have higher turnover, meaning that they change out their portfolio a lot, can have higher transaction cost. Sometimes you have transaction costs when you're dealing with like brokerage commissions to buy and sell. To me, again, another area that I think my 30 years of experience has gotten a lot better. I know some of the companies nowadays don't even charge commissions to buy and sell stock because they have other ways they can make their money. You could have account management fees. You could have advisor fees. Those advisor fees could be typically something that they quote out as a flat fee for service. For example, they might charge $750 a year or a one-time fee to build out a financial plan. That could be a consulting type fee that you pay. So when you look at this, I mean, all of these fees kind of add up. This is an area where a lot of times consumers or investors may not always feel comfortable asking the financial firm, what am I paying today? And what is the cost if I go with your firm? But I would say, this is your money. You shouldn't feel uncomfortable asking these questions.
Hmm.
And, if you don't know what you're paying today, or maybe you feel like they're not telling you the whole story, you're the type of person that would really benefit, from that second opinion. And that second opinion is what we give in that retirement team action plan. So in that, we're going to go through 4 areas of your finances. And one of the areas that we're going to look at is how to help save costs. Look at your expenses. We'll dive deeper into that, and we'll get you the accurate information on what your expense ratios are, talking about which ones that add value and which ones maybe you could be expenses that you could eliminate, because I love helping people eliminate wasted expenses. And if you have $250,000 or more of investable assets, the way you get that is to give our office a call and ask for the Retirement Team Action Plan. And in that report, we'll get you the detailed information on what that looks like.
Because it's all about value. And if you don't know what you're actually paying, it's really difficult to assess that value. The phone number to get that retirement team action plan, which includes that second opinion and fee analysis, 419-794-3030. The website, arhq.com.